Hey Bowtie Nation, Joseph Hogue here, and we've been talking a lot about penny stocks lately, and through my research, I found 5 penny stocks with the highest potential, but they stay under the radar because nobody is talking about them. I'm talking about the smallest of the small and the least followed, the penny stocks with little or no analyst coverage, and nobody talking about them on message boards. Companies so small they could grow 50 times or more and still have more room to grow. I want to get started with the first penny stock on our list, POPreach Corporation, ticker INIKF. But please make sure you stick around for very important warnings about these and how to analyze them later. POPreach, formerly Ionic, is a push notification marketing platform for digital media. It offers a complete solution for brands from strategy and messaging to paid media, performance marketing, and ad tech data analysis. Any one of these verticals is a market in the tens of billions in annual revenue. For example, just data platforms and solutions is estimated to be at over $52 billion market, growing at 15% a year, all the way up to $352 billion performance media marketing. POPreach is hoping to use data from more than 76 billion monthly ad impressions and 30 billion data points a year to develop AI models that are going to produce a competitive advantage, lowering marketing costs for clients and improving customer targeting. Now, obviously, a lot of other platforms are trying to do that same thing, so it's not saying that the company will be the first to develop that killer app, but revenue doubled over the last year to $140 million, and while net income is negative, adjusted earnings before interest, taxes, depreciation, and amortization, or EBITDA, is a healthy $15 million. Like most of these unfollowed penny stocks, we don't have much to go on forecasts because there just aren't any analysts covering the stock or management guidance, but with that kind of growth and profitability improvement, this is definitely one to watch. We're just getting started on our list of penny stocks, but if you've ever wondered what's in my portfolio or want to see the stocks I'm buying, you can now by joining me on the Blossom Social Investing app. It's like Twitter, but for investors and without all the drama. The app was created by YouTuber Brandon Beavis for investors and by investors, and I just started using it last year and love the app for getting ideas and sharing my own portfolio. This is so much more than just another social app though. You can connect your brokerage accounts or just input your portfolio to track all your stocks in one place. You're going to see insights like portfolio percentages and average dividend yield across the entire group. You're also going to be able to join a community of more than 100,000 investors in the social feed to see what everyone is talking about. I've shared my portfolio on the app and it's totally free to download, so look for the link I'll leave in the description and check that out. I featured Census Healthcare, ticker SRTS, recently for its strong sales growth and profitability. The company is a medical device maker with non-invasive radiation therapy for certain types of skin cancers. In fact, Census is the only company with an FDA-cleared system to treat keloids and has a 97% success rate on the procedure. This company is already profitable and expected to grow revenue at an average 30% between this year and next to over $41 million and to report 47 cents in per-share income. Census booked $5.7 million in EBITDA over the last year, a profitability margin of 18% on its $31 million in revenue, and that profitability should improve as the recurring revenue grows to be a bigger part of this total. I'll link to that previous video in the description below, but what I'm looking at here with any penny stock I research is that sales growth plus EBITDA profitability has got to be greater than 40. It's an old investing rule I used as a venture capital analyst and is an easy and quick way to find stocks that are not only growing at those double-digit speeds, but also creating real lasting value for investors through their profitability. One of the larger companies here on the list, QuickLogic Corporation, ticker QUIK, is a little more heavily followed, but still very much a small penny stock at $151 million market cap. The company lives at the heart of the semiconductor world in Silicon Valley, offering embedded FPGA and IP software. Quick was awarded a $6.9 million base contract from the Department of Defense in 2022, and its revenue took off from there, with the potential to scale up to a contract of $72 million over the 4 years through 2024. It's also inked a collaboration with YourChip to develop chiplets and is expanding into related markets. And it's that kind of product expansion that helped it grow revenue by 31% last year to $21 million, and forecast to continue growth around 30% this year and next to as high as $35 million, all as the company maintains a strong gross margin and increases its net income from 17 cents per share last year to a forecast of 65 cents a share next year. Now, these next two penny stocks have the highest upside potential, but we need to talk about a very important warning in these super small penny stocks, how they're different from others, and how to make sure that you don't get scammed. You see, most penny stocks we follow here on the channel are those companies between maybe a $200 million to $1 billion in market capitalization. That is extremely small compared to something like a $3 trillion Nvidia, but even these smaller companies are heavily followed by analysts and the investor community. For example, ChargePoint Holdings, one of the 3 major EV charging companies, is still only a $700 million market cap, but we have 16 analyst estimates for the revenue and 7 estimates for earnings over the next 2 years. That is more than a dozen professional analysts researching the company, drilling down into those financial statements for investors. And beyond that professional analysis, look on any social app like Blossom, and you're going to find dozens or more investors talking about the company, offering their own insights. Then these nano-cap penny stocks, many of them under $50 million market cap and liquidity of under 20,000 shares traded each day. These are unheard of and, more importantly, unanalyzed. You're not starting with those forecasts and the ratios you see on other stocks. That analysis is all going to be up to you. Many of these are also OTC stocks, what we used to call pink sheet stocks, because the data used to be published on pink sheets of paper. OTC stocks don't trade on the regulated exchanges like the NASDAQ or the New York Stock Exchange. These over-the-counter stocks trade through a dealer or a broker specializing in the OTC market, and that means they don't have that same regulatory oversight requirements that you see in other stocks that trade on those formal exchanges. For example, OTC stocks don't need to have their financial statements audited. Now, management is saying that the financial statements are true and correct, but there's really no independent accounting firm to verify and confirm those numbers. That means that not only do you have to do much of the research on your own, but there's still going to be that risk that management is playing fast and loose with the numbers. Now, that doesn't mean you have to spend days researching each stock. I'm going to outline the initial criteria I look for in these and then some ideas for deeper research you can do on your penny stocks. First here, all you out there in the nation know, one of my favorite measures for stocks is the Rule of 40. This was a measure I used as a venture capital analyst to find the startups creating that real long-term value, and it works just as well in researching your penny stocks. Here you're going to take the sales growth, and it can be an average of forecasted growth you see on any analysis, or just the current existing growth over the last couple of years. Then you also take the EBITDA divided by the revenue over the last year. That gives you the company's EBITDA profitability margin. Now, the Rule of 40 says that the best companies adding real long-term value are those where that revenue growth plus the profitability margin equal 40 or higher. It's a great way to find stocks with a balance between sales growth and profitability. Next here, cash flow is also extremely important for penny stocks, so I'm going to take a look at the statement of cash flows for the last few years. Folks, cash is like oxygen for startups and these super small companies like these. With enough balance sheet cash, shown here as this ending cash position, even a company reporting negative cash flow will have the time it needs to grow into that profitability. So here in cash flow, I'm looking to see that the cash flow from operations is positive or at least lower negative over time. I'm also looking to see how many years or quarters of that cash burn the company has in the ending cash position. That's the easy part, the quick analysis you can do with information posted on Yahoo Finance or within the company's financial statements. For these OTC stocks though, the ones not covered by at least a few analysts, you're also going to need to do a little shoe leather analysis. For these, I might check out the employees' LinkedIn profiles, see where they worked previously, and if there are any signs of serial entrepreneurs with a history of bankrupting companies. I'll also research to find where the company's products are sold and maybe even call up a few posing as customers with questions. Nation, it is an intense process, but it's the kind of boots-on-the-ground analysis you need to be doing to avoid the scams that happen in the OTC market. The fact that nobody is watching these stocks means potential returns can be huge when you find a winner, but that same fact means you need to be doing the work that nobody else is doing. Exodus movement, ticker EXOD, is kind of stuck in limbo right now, but could be getting a boost soon. The multi-asset wallet for crypto and digital assets allows users to secure and manage their crypto off the exchanges with self-custody. That self-custody feature could be its killer app advantage with anyone that's lost money on an exchange like FTX or, like myself, on BlockFi. You know how important it is to hold your crypto off the exchanges. Revenue dropped hard along with the crash in crypto after 2021, but grew at a 12% pace last year, and EBITDA remained positive throughout the period, which is a sign of good management. The platform already has 3.2 million active users with strong growth in the fourth quarter of last year. And a look at comparable valuations across other crypto-related stocks, exchanges, and platforms is interesting. Now, EV, or enterprise value, is the market cap of a company minus the cash on hand, but then adding back in debt owed. And you can see here, Exodus is absolutely tiny here at $70 million compared to exchanges like Coinbase or even miners like Marathon. Valuations on an EV to sales basis are high though, with Bitcoin touching $70,000, except for Exodus, which trades at just 1.3 times revenue. The shares were approved to list on the NYSE in May, but the SEC delayed it to review its registration documents. A listing on the big board and out of the OTC market could be a big boost to liquidity and possibly for the share price, but Gensler and the SEC hates all things crypto right now, so it could have to wait longer. We've got one more penny stock to highlight, one growing at 45% a year. But what are we really talking about when we talk about these undiscovered stocks? We're talking about that undiscovered value, and I found another 7 penny stocks that you won't want to miss. Check out this video next for the penny stocks too cheap to ignore. SCI Engineered Materials, ticker SCIA, is a downstream supplier to semiconductor industry, providing materials used to produce nano layers of metals and oxides for systems, as well as for coatings. Products are also used in solar, aerospace, and the optical markets. That surge in semiconductor demand has helped the company book a 108% increase in revenue over the last 2 years, though a single customer accounts for 3/4 of that, so there is significant customer risk here. Join me on the Blossom Social Investing app and see all the stocks in my portfolio, or click on the video to the right for the 7 penny stocks too cheap to ignore. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.